So are you seeing, with properties that have been sitting on the market a little bit longer, have you seen an increase in investor type loans or investors that are looking for financing from a lender's perspective?
Definitely, there are more investors interested in buying and investing into properties, and with rates going down, I see some,
Okay.
and we do have some new programs that we just rolled out.
Okay.
Yeah.
Okay. Yeah. What kind of programs? 'Cause I know that there are so from what I know, DSCR loans using a HELOC, using private money, hard money, those are different things. What's out there that you can offer, and what are the difference between some of these things?
Yeah, so I actually prepared some slides this time. Let's see. Yay. So there are a few different options, like traditional, conventional loan. The conventional is the only traditional program that allows investment loans. FHA, VA does not allow it. So we're talking about conventional. Minimum down payment is 15% down. It's a full underwriting. They're looking at income, assets. It does have a higher interest rate, and I'll go over it in a little bit. But so that's traditional conventional financing, fully amortized 30-year fixed loan, um, or 2015. So DSCR is the one where we don't check income at all. All we need to do is to make sure that the future rental income will cover the mortgage payment. In some cases, the rental income could be 25% lower than mortgage payment, but so this program is pretty flexible. 20% down payment is minimum. You might get actually better interest rate than with traditional loan, especially if someone is putting only 15% down. There's gonna be a pretty high rate and discount points involved with that. DSCR, depending on the credit score and that 1-to-1 ratio, or maybe 75% to 1, they're gonna have some fluctuation in the interest rate. So some investors use their equity in their current homes if they have a lot of equity in the primary residence and they don't want to cash out, they don't want to sell, right? They cash out in a way, and use the equity in the current home to buy a new investment property, maybe even in cash, especially if they're looking at condominiums with lower prices. They get HELOC. HELOC stands for home equity line of credit, that it goes behind the first mortgage. Typically everyone has a first mortgage on a property, and there's a bunch of equity, so they take a second mortgage, take that equity out. It could be a good strategy, but it does have the fluctuating rate, and that actually the rate that Federal Reserve is planning to lower in a couple of days, in a week or so, right? So the HELOC rates, they tied to that prime that Federal Reserve controls. So the fluctuating rate, if prime goes up, the HELOC rate is gonna go up. If down. So that's works kind of like a credit card, but it has a property secured by a property, right? So the fluctuating rate, and it's interest only, so it gives you flexibility and gives you additional cash flow. But the con is that the rate is not fixed, and it's interest only for depending on HELOC for 10 years. Some have 5 years only, and then it amortizes over 25 or 20 years. Some would use hard money or private money. I guess those would be, for someone who maybe has low credit scores or cannot get any loans that I mentioned above for whatever reason. So they would go to private investors. The pro is that they can get the loan. The con is that it's a short-term loan. Typically, it's 1 or 2 years, and then they have to pay it off, and they have high interest rates because it's higher risk for the investor, for the lender. So the program that we just rolled out, the Prosperity Home Mortgage rolled out, we call it Investor Cash Stream program. It's actually a pretty good one, and I recommend people to look into it. The key features are 30-year fixed loan, but it has 10-year interest-only period.
Wow.
Again, you know, it's an option, right? You can pay
Correct.
extra to principal, but you can pay just interest only to have that extra cash flow coming in. You can, it's good for regular residences like 1 to 4 units, townhouses or condominiums. We can do from 250,000 loan amount to 1.5 million. It's
Okay.
pretty good. 20% down payment, and it's available on purchases and refinances, not just regular refinance, but also cash out refinance. And cash out refinance is when you kind of do like a HELOC, right? But instead of doing HELOC, you just get in one mortgage, you refinance the current mortgage and increase in loan amount to pull some money out. So this is a good feature for this investment loan. And, you know, so it gives you lower payment with the interest only. It enhances your cash flow from the rent, reserves increase to help with future repairs, because you can pull the money out with doing cash out refinance, and, you know, more cash to purchase additional properties. You can do that, putting money out of investment property. If you already have investment property and you want to buy another one, and you have a extra equity in that property to get HELOC, not every lender would offer HELOCs on investment properties. And if they do, their interest rates are pretty high. We do have HELOC option for investment property, but the rate is prime plus 3, which prime is at 8.5. So do the calculations, 11.5% or even 12% on HELOC is pretty high, when they could just do the cash out refinance here. And here is an example of comparing regular conventional loan. Let's say someone is getting a property for 750,000. Their rate, the credit score is 740. They put in 20% down, and these are the rates as of August 21st. So I didn't update that one slide, but it's similar to what it is now. Maybe could be a little bit better, but on regular conventional, the rate is 8.125, and they have to pay those 2.5 discount points we were just talking in the beginning, right? To get that interest rate, you have to have this additional, besides all the regular closing costs, they would have to pay 2.5 points, and their principal and interest payment is $44.54. If we look at interest only at cash stream loan that we have, 7.375% interest rate with no points, compared to 8.125 with 15 grand in points for exactly the same situation, right? Example, interest only payment is $36.87. So it frees up $767 for cash flow savings for them.
Okay.
Wow, I like.
Are these limited, like for a traditional loan, you can only have, I can't remember if it's 8 or 10 or whatever in your name at any given time? Are these
10
limited?
properties, this one exactly the same. So the beauty of this program is that it follows Fannie and Freddie guidelines.
Okay,
Just like, if you're looking at DSCR or jumbo products, right? It's investor loan, it's a niche program, portfolio loan, that they also call it. It stays with that lender and they have their own guidelines. Could limit it to 4 properties or something like that. But here it's 10 financed properties. It's not just 10 properties, it's 10
right.
financed. If somebody owns property free and clear, that doesn't count.
Okay, okay.
Yeah, so
Very cool. I
Yeah.
like it. Then we gotta go find a rental.
Woohoo.
Let's go shopping. All right, very good. That's all.
Yeah,
That's awesome. I
good.
didn't realize that plan was there. That's good.
Yeah.
Yeah, it's a good
Yeah.
option. All right. Well, I think we all are still recovering from our long weekend, so.
I threw a lot of information at you.
You did. That
Yeah.
was good information. It's good reference. Is that plan going to be around for a while, or is it kind of a short-term plan, or do you know?
So far, it's a long term. We'll see how it works.
Okay.
If we get a lot of interest in it, we'll keep it.
Gotcha. Okay.
Yeah, I like
So
it.
get more people. Let's
That's right. That's right.
Send them to you.
There you go.
Oh, do you have your slide with your info?
No, I don't.
Okay, that's okay. It's 517
571.
245-3000.
Yes, exactly.
571.
Impressive.
I said 517.
High five.
That's right.
Thank you. All right, Tatiana, thank you so much.
Thank you, guys. It's nice to see you.
You
You
too.
too.
You too. We'll see you next week. We'll be right. We'll back to this
Yeah, that's
regular.
right.
Now that we're out of the summer, we can get back to the
Yes.
regular meetings.
See you
All right.
next week and stay healthy, everyone. I
Yeah,
hear
you
that
too.
COVID is walking around.
Yes, it is. Bye.
Bye bye.